Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Canary in the Coal Mine, because we're going to talk about an instrument that has been warning us that something hasn't been quite right now for several days, if not weeks. And we're going to look at that in a few minutes. But we're going to start off and look at the S&P 500 and the Dow Industrials. Then take a look at the VIX and see what it did on Friday, which was incredible, and what it may be telling us. Also, it looks very interesting. We're going to talk about that canary in the coal mine, and then I want to check in at the Bloomberg Commodity Index and look at what oil did on Friday. All right, so let's start off here with the S&P 500. So it was down 107 points on Friday, 103 points for the week. Big move. Now, the interesting thing about the SPX, it's been really staying above this 10-day moving average here, the blue line. It hasn't closed down below it until Friday with the big move to the downside. Now, on the weekly chart, big move, closing down below the trading of the last 3 weeks. The other interesting thing in here is I talked to my members many times about how the market cycles between compression and expansion. Compression and expansion. Look right up here. Compression and expansion. Look at the previous week. Look how compressed this week was as we just kind of like slowly shrank, especially over the last couple of weeks. And then we get this explosion this week. Now, granted, most of that happened on Friday, but it was still a part of the week. So that's the picture. And let's take a look at the Elliott wave picture. So here's the picture. Here's this channel that we've been in with the 5 waves up on the SPX. And then let's take a look at the daily chart. Okay, so I believe here's the 4th wave, ended right here on the low of October 4th, and that we've been in a 5th wave up. Now, the alternate count would say that this entire move was maybe just only the first wave, wave 1, and then we get wave 2, and then we get a 3rd wave. We'll see. This is really a question in my mind because that's not confirmed. And right now, this looks like 5 waves up. And the interesting thing is, look how we've been bouncing along the top of this trend line that's been drawn across the highs in here. And we snuggled right up against the top of it. Got very close with this last move, the 5th minute wave in here. This will move from here, from this low on October 4th to this little high right here. That was not a 5-wave move. Okay, that was a 3-wave move. That's why you have to look at this very short little wave too. And it's a little clearer when you drill down and take a look at the intraday timing on it. But that's why we have the count that we have in here. And we're watching to see if this is going to come down and take out this low right here, which is, let's see, 4278.94. 4278. Let's just think of that, 4278. Now, this has been hanging up there for a while. Let's take a look at the Dow Industrials. Okay, here's the picture on the Dow Industrials. The Dow was down 905 points on Friday, 703 points for the week, and it was the 3rd week in a row that it was to the downside. This one looks a little bit more like it's rolling over in here. We definitely see that over here on the daily chart. We got the moving averages breaking below the 10, below the 21 in here. And look how far we've come down with this move on the daily chart. Let's take a look at the Elliott wave picture. Here's the channel on the weekly view. And yes, we have a small abbreviated little 5th wave. But you know, you do see that more times than than you would think. We're getting a significant divergence showing up on the RSI with this last move up. And when we look over here at the daily chart, here's what's going on. This 4th wave was a very big sideways type of corrective activity in here. I've got it labeled as a WXY. And this last Y was really kind of a stretched out triangle in here, and it becomes more clear as you get into the B, C, D, E count of the triangle. And so I've got this wave 4 ending with the low on October 6th and that we've moved up in a 5-wave move here, okay? Now, what's interesting is when you draw this channel and you draw the trend lines connecting waves 2 and 4, right here, we have broken down below that trend line with the price action that occurred on Friday. So we've got a break of the trend line, break down out of the channel. There's a couple other things going on. We've still got this possibility of an alternate scenario going on. And just like I talked about in the SPX, this could be 1, this could be 2, and then we go off and do 3. Okay, again, that's a possibility. Now that possibility goes away if we come down and take out this level right here, which is the ending of wave 4 and the beginning of wave 5. We take out 33,854.69, and that scenario goes away. The other thing that was possible was that maybe, on this count right here, that we had 1, 2, and this was a bigger 3, and then that maybe we were doing a 4th wave right here. But that 4th wave scenario just disappeared because we just overlapped wave 1, the wave 1 high right here. So there's no way that this could have been this. Here's what I'm talking about. 1, 2, 3, 4. We're thinking 4. All of a sudden, nope, not a 4. Okay, so these are the two scenarios that are in play. That 5th wave is in, all 5 waves, 5 minor waves, 5 intermediate waves, 5 primary waves, and even higher degrees are done. The other possibility is that we are still subdividing higher into a 5th wave that's got more to go. We are going to find out very soon. All right, so that's what's happening with the Dow Industrials. And let's take a look at the VIX. Look at this explosion on the VIX. Closed at 2862, up 10.04, up 54% on the day. Now, what's really interesting about this is look at this setup here. This looks like a possible large head and shoulders type of bottom in here. You can just see it. Now, what's really interesting about this implies a pretty big move coming, okay, still to come. And when I look back and say, well, okay, well, did we have anything somewhat similar to this? Well, look over here and see what happened before, that whole explosion late February into March of 2020. We had a similar type of bottom, but this one actually looks bigger than that one. So it's going to be real interesting to see what kind of follow through do we get. Now, this was one heck of a move, big gap. We'll see what kind of follow through we get this coming week. We are deeply oversold, but that doesn't mean we can't get even more oversold. Let's take a look at that canary in the coal mine. The high yield bond fund, HYG. This has been collapsing and came down now out of a major topping formation in here, head and shoulders formation. And look how this has dropped. It was down 62 cents on Friday alone. Very big move. Now, where was the peak on this? The intraday peak was on September 23rd. The closing high was September 15th. Well, where's September 15th, September 23rd? Well, here's the 15th right in here on the S&P, and here is the 23rd. That's when HYG was peaking, and it's done nothing but sell off. And look what the S&P 500's been doing, going in the opposite direction. So HYG, the high yield, has basically been saying, no, I'm not confirming that move at all. This has been screaming, especially the last couple of weeks, it's been screaming risk off. And I talked to my members about this here, especially this last week. This was just really eerie. I was looking at this and I was thinking, something is not right. Something just doesn't seem, because of the way this was plunging in here. And then we get this price action that we got on Friday. Let's take a look at the weekly chart, and you can see even more dramatic in terms of the kind of move down $1.09 on Friday. This is the lowest close of the year. It's the lowest close on HYG since the week of November 8th, 2020. And yeah, it can roll over pretty fast, as is indicated by what happened back in February, March of 2020. And all you got to do is go back to the fall of 2018, and you can see the kind of price action that happened in here. I mean, here's the fall of 2018. Okay, this is the end of 2017 into the beginning of January 2018. Remember the stock market was peaking in January? Yeah, this was signaling, nah, not so fast. All right, so that's what's going on. I would say the Canary has pretty much been telling us that something is not right with this market, and we'll see what kind of follow through we get here through the end of this next week and through the end of the year, actually. All right, let's take a look at the Bloomberg Commodity Index and oil. Okay, here's a long-term chart of the Bloomberg Commodity Index, and you can see how we broke out of that very long-term trend line, broke out of it to the upside here at the end of 2020, and you know, now we've got 5 waves up, and it looks to me like 5 waves complete. And look at the divergence that's shown up in here between wave 3 and wave 5. And let me zoom in. This is a weekly view. We got the reversal candle the week of October 25th. And then now we've come down hard this last week, and we're right at the trend line. I am looking for this to break this trend line and move into some kind of corrective action. I mean, how far is it going to correct? I mean, who knows? I mean, if you look at this movement that's happened, the 5 waves up, I mean, 50% retracement is down here to 79. That's pretty big. Actually, if I take it off semi-log, 50% takes it to 82.5. So a little close, but yeah, we'll see what kind of price action we get here in the commodities. All right, let's pull up oil. Okay, I track USL daily, which is the United States 12-month oil ETF. It was down. Let's see, where is my number? Down 11% on Friday alone. WTI, West Texas Intermediate futures contracts, near-term futures, down 12%, closing at $68.50. Huge hit. Look at this move. And down $1.98 here on USL for the week. Let's take a look at the Elliott wave pattern that we've got. And I think that we've got 5 waves complete in here. Wasn't quite sure if we had that, but earlier, about a week ago, I said to the members, I said, you know, this is just pulling back. Actually, it was earlier this week. I said, it's pulling back just a little bit, way too far in here, way beyond anything that we were seeing in terms of corrective in the moves in here. So felt like we truly had the end of the 5th wave up. And now, sure enough, that's what we're getting. We're pushing hard down here. We've broken down below this channel. And again, it's a similar type channel that I've drawn connecting wave 2 and 4, projecting from 3. And you can see how we bounced around near the top of that channel with the end of wave 5. And now it appears that we're breaking down below it. We'll see what kind of reaction we get this coming week. Okay, that's it for today, for this week. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button and that little bell to remind you when videos are published. And if you'd like to have more of this kind of information, head on over to joehenches.net. Check out the website, check out the membership. Everyone, have a great week. We'll talk to you on the next video.